Hi, this is Adam Hewson. I'm coming to you, as always, from the digital studios of Market Club. And I want to look at a market we looked at some time ago and we actually got it right, and we've got it right so far this year. And that's the dollar index. The symbol is DX. And we're looking at this, looking at a weekly chart of the DX. That's a weekly high-low last chart. So every bar you see here represents the high, the low, and the close, and the open for the week. Gives you kind of a very nice picture. The weekly charts are very powerful, and you should definitely use them in your trading because the intraday, the daily are somewhat important, but in my opinion not as important as the weekly. So I'm going to take everything off the screen. As you can see, before I do that, but as you can see, the dollar had a kind of a base, had a nice move up towards the end of last year, that's 2008, had a pullback, went back up, made new highs, but really didn't do new highs on the momentum, and created what we consider to be sort of a double top and a pivot point. We've talked about this before many times on the various markets creating tops like this. So let's take everything off the screen. I'm going to put our Market Club triangles, trade triangles on here just by clicking here, and you can see that at the moment they're all pointing down. It's a minus 100, very strong downward trend, which is right here. And I also want to show you here, this is where we did the video last year saying that the market was going to go up, and in fact it had a very nice move. I think we predicted around 84, 85. We hadn't predicted these last highs, but we caught the sweet spot, which is no one's going to predict the bottom of the market or the top. You want to get this section right here. That's where the big profits are made, between these 2 points. And we did very, very well on that. Now what's going on right now? So I'll take everything off the screen. Our last signal was right here. This is basically way back in June of 08. So 08, and now we've just had another signal which occurred in May, and you can look at this signal right here. It's at 82.63 on the monthly, 82.63, which is right here, and we've had a nice move down. We're currently trading at 78.99. So what's going to happen with this market? Well, with our monthly triangles and weekly triangles and daily triangles, we only really care about these two right here. Okay, this is not so important to us on the dollar index. These two are the keys. The monthly is used. The monthly trade triangles are for trends. Okay, and we use the weekly for timing. Okay. So if you look at our earlier video on the dollar index, which I'll give you a link to, you'll see exactly what we were saying way back here and what has happened and what we're saying now. Now I'll take everything off the screen because there's some interesting things I want to share with you. So let's just take this off the screen, and I'm going to go up to a monthly chart. So it's very simple to do. What I want to show you is these trends tend to persist. This is a signal that we had in October of 06. And you can see the market had a huge move down. Here's a signal we had last year. I think it was June of 08. Market moves up. Here's the signal we've had, move down. Now this, if we just count these months, we can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 months, okay? And here we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 months. So you're going to see a trend, I think, of at least 12 months, maybe longer, starting last month in the dollar index. So even we've just started here at this level, at 82.63, we could be under pressure or going down for quite some time. And obviously the natural place to look to see how far this market can go is this. I'm going to go back to our weekly chart. So this is our monthly chart. So remember, we use the monthly for the trend. So I'm going to write that down again. I can't emphasize this enough. So we use our monthly trade triangles, which are right here, for the trend. And you can see they do very, very well, even here. And I'm going to go back to our weekly charts, take everything off the screen. I'm going up here very simply to our weekly. And I'm going to go to a close only chart. So this is the pattern I want to show you. It looks as though we have this double top and the pivot point. The market's gone down below here. It's broken out to the downside. So if we take the measurement from this level here to this level right here, and we can say that's I'm going to just put these in as X's, but we're going to count 1, 2, 3.5 boxes down. If we take the same number down here, we'll call that a half. We'll call that 1, 2, 3. So we should be looking for the dollar index to get back down to 74 and possibly even back down to the 72 level if things get very excitable. But the trend is clearly down on the dollar index. You're going to be reading a lot about this market in the weeks and months ahead. It's one of the things that's pushing crude oil prices higher. That's a weakening dollar. And it's going to be very inflationary later on for the U.S. So using our trade triangles, we've been very successful trading this market. You can see our track record. We publish it. And if you can't see it, call the office. We'll be happy to point you to that record. So this is Adam Hewison for Market Club, looking at the dollar index and where we think it's going to go. Trade triangles are all in agreement. It's going down. Thanks for watching.